All right, let's really dig into this one. Welcome back to the deep dive. Today, we're cutting through the complexity of the One Big Beautiful Bill Act, OBBA. Right.
That's the one.
This landmark legislation isn't just another bill. It feels like a fundamental reshaping of the tax landscape for American innovators. We're talking everyone from, brand new startups to established freelancers.
And what's particularly noteworthy here, I think, is how directly this act responds to what many called the innovation squeeze. That came out of the Tax Cuts and Jobs Act of 2017.
Ah, the TCJA, right?
Yeah, that earlier law caused, well, significant cash flow issues. It was effectively forcing companies to pay taxes on money they hadn't really earned yet. This phantom income idea.
Phantom income, how did that work again?
By eliminating the immediate deduction for research and development expenses. A huge change at the time.
Okay. And our mission today is to give you that shortcut to being truly well-informed. We're going to show you exactly how this new law, OBBABA, restores those immediate R&D deductions, unlocking crucial cash flow and hopefully fueling the next generation of American enterprise. So let's set the stage. For what, over 60 years, companies could immediately deduct R&D spend.
That's right. If you spent it, you deducted it that year. Simple.
But then came the TCJA. And starting in 2022, it mandated that painful 5-year amortization for domestic R&D.
5 years. Yeah.
So this meant if you spent, say, $1 million on innovation, you could only deduct what? A fraction.
Just $100,000 in that first year for
Right.
$1 million spend. Imagine the cash drain.
Wow.
It was indeed shocking for many businesses. This raised effective tax rates dramatically. We saw reports of companies facing tax liabilities equal to 95% of their book income.
95%.
95%. It's crippling. But the really interesting part, the sort of game changer here, is that OBBA, effective for tax years beginning after December 31st, 2024, it flips this script completely.
How so?
It brings back 100% immediate expensing for domestic R&D. Full stop.
Back to the old way, essentially.
Yeah.
But just for domestic.
Exactly. And for smaller businesses, too. Those with under $31 million in average annual gross receipts.
Okay.
There's fantastic catch-up relief.
Catch up. What does that mean?
You can actually deduct those remaining prior year expenses, the ones from 2022 to 2024 that you had to amortize.
Oh, that's huge. So you get to claim what you missed out on deducting earlier.
Precisely. It helps clear that backlog. But here's maybe the masterstroke, a subtle but seismic shift in policy. OBBA intentionally leaves the harsh 15-year amortization for foreign R&D untouched.
15 years. Wow. So domestic gets immediate, foreign gets 15 years.
Right. This isn't just closing a loophole. It feels like a very direct, calculated move to, well, repatriate innovation, to bring it back home.
So the message is, do your R&D in the U.S.
The deep insight here seems clear. The government is actively building a competitive advantage for local R&D, nudging companies to rethink their global footprint.
When I hear R&D, my mind often goes straight to scientists in labs, white coat speakers.
Yeah, the classic image.
But you're telling me it's far more expansive than that? What are businesses maybe missing?
Absolutely. It's one of the biggest misconceptions, I think. The core principle is the uncertainty test.
Uncertainty test.
Yeah, imagine you're building, say, a new app or trying to improve a manufacturing process. You're not sure if a certain feature will work or how to even design it efficiently. That process of figuring it out, testing, iterating, to remove that uncertainty, that's the core of the R&D test.
Okay. So it's about solving technical challenges where the answer isn't obvious.
Exactly. Seeking answers to truly open-ended technical questions. And this applies really broadly. The product can be a physical goods, processes, even internally developed software.
Internally developed software counts. That must cover a lot.
It does. So that means a huge range of expenses could qualify.
Like what specifically?
Full employee compensation. So salaries, bonuses, even stock-based compensation, health benefits, materials, prototypes.
Cost-based comp, too. Interesting.
Yes. And crucially, it's an all-in rule for software development. It covers everything from planning and design to coding, testing, even upgrades.
For the whole software life cycle, basically?
Pretty much. And it also includes a reasonable portion of indirect overhead.
Overhead, like rent.
Like rent and utilities for your R&D space, yes. And even patent legal fees.
Okay, that's broader than I thought.
But here's a critical point. And this isn't something you can just, pull from your general ledger easily. To truly capture and justify these expenses, especially for an audit, you really need a formal Section 174 study.
A Section 174 study.
Think of it as a detailed forensic accounting project. It's specifically designed to prove your R&D claims.
Got it. So document everything. Now, this is where it gets, well, incredibly powerful, right?
Yeah.
You mentioned stacking benefits.
Yes.
So you're not just reducing the amount of money the government thinks you earned. That's the Section 174A deduction, cutting your taxable income.
Right, that lowers your income base.
But you're also getting a direct dollar-for-dollar discount off your final tax bill. That's the Section 41 R&D tax credit.
Exactly. One reduces income, the other reduces the actual tax you owe. It's a powerful combo.
It's like getting a discount on your groceries and then cash back at the register.
That's a good analogy. And here's another powerful benefit, especially for qualified small businesses.
Okay, who qualifies there?
Generally, think under $5 million in gross receipts. For them, the R&D credit can even offset employer payroll taxes.
Payroll taxes, so that means immediate cash back, essentially.
Yes, an immediate cash benefit, which is, well, huge for early-stage companies that might not even have income tax liability yet.
Wow, so the old no double-dipping rule in the tax code has effectively changed here.
It seems so, for this specific interaction.
This sounds almost too good to be true for businesses. Are there any scenarios where a company might not want to take full advantage? Or is it really always optimal now?
For domestic R&D, it's almost universally optimal now, precisely because the rules, as they stand with OBBA, allow you to claim both the full immediate R&D deduction and the full R&D credit.
Okay, so we found the money, we've amplified its impact by stacking benefits. How do you make sure you keep those benefits? Audit proofing, I guess?
That's the crucial next step, absolutely. Remember, the burden of proof is squarely on you, the taxpayer.
Right.
Robust, contemporaneous documentation, think detailed project plans, meticulous time-tracking records, contracts. It isn't just about surviving an IRS audit.
It's more than just compliance.
Yes, it's a strategic asset.
How so?
Well, it signals a well-managed operation, especially to potential investors. It shows diligence and strategic foresight.
That makes sense. Good documentation equals good management.
Exactly. And one more thing on that note. While OBBA is a huge federal win, you can't forget the state tax patchwork.
State taxes, always different.
State rules vary widely. They often require totally separate calculations for R&D.
Some more complexity there.
A bit, yes. And remember that 15-year foreign R&D amortization. That means you really need a tax-adjusted R&D budget if you have global operations. You have to factor that long tail in.
Right. Can't just look at the cash cost.
Yeah.
Need the tax-adjusted view. Okay, we've covered a lot of ground today on OBBA. As we wrap up, what's maybe one key piece of advice or an often overlooked factor businesses should prioritize?
I'd say focus on that domestic R&D piece. The OBBBA is a really decisive pivot, putting cash directly back into innovators' hands. But it's doing so with a clear geographical bias. So prioritize domestic R&D where possible, meticulously document every step, and strategically combine your deductions and credits. That's the trifecta.
Prioritize domestic, document, stack the benefits. Got it. This truly raises, well, an important question for the future, doesn't it? How will these new, pretty strong tax incentives for domestic R&D ultimately reshape the global landscape of innovation? Will it really drive more research and development back to U.S. soil over the next decade?
That's the multi-billion-dollar question, isn't it? How market behavior responds to these incentives.
Something to mull over. Thanks for diving deep with us today.